Hello guys, welcome back to my YouTube channel. This is Perfect Forex, and today guys we'll be doing a quick rundown of some of the commodities we looked at yesterday. If you're just coming across this video for the first time and you've not seen the video I dropped yesterday, I urge you to go back to the most recent video I dropped, the most recent content I dropped, and watch that video. We talked about some of the commodities on the synthetic indices market, how I expect them to play out, and currently they are doing wonderfully well. But before I get on to the analysis of today, if you're just seeing my channel for the first time, if this is the first time you're coming across the YouTube channel, I would like you to click on the subscribe button and also do want to turn on the notification bell so that whenever I post new content like this, you will be among the first people to be notified. And also, guys, do want to share my content with your friends, with your family, those interested in trading the Forex market and they don't have any knowledge whatsoever. You can do want to share the link of my channel to them so that they can also get first-hand knowledge of the Forex market and also the synthetic indices market. And also, guys, do want to smash the subscribe button and also do want to drop your comments in the comment section and click on the like button, as all these helps the algorithm of my video to reach as many people as possible. So guys, quickly, let's do a quick rundown of some of the commodities we looked at yesterday. So yesterday we looked into Crash 500 index, and I stated categorically, can you see guys? I stated categorically that Crash 500 will be tanking from this zone, that I expect Crash 500 to tank from this zone down into this zone, down into my point of interest. Some couple of hours ago, I saw Crash 500 buying from this zone, and I knew this was the first buy. I wasn't in a hurry to enter into the market because I have said that until Crash 500 drops into my point of interest, I won't be taking any trade. As you can see, guys, the chart does not lie. The chart does not lie. You can see Crash 500 tanking to the downside, tanking heavily to the downside. So we talked about Crash 500 yesterday, and also Crash 1000 index. I speculated categorically that I'll be looking at an overall buy on Crash 1000 index, and as you can see right now, Crash 1000 index is still very, very much bullish. Very, very, very much bullish. Although I am out of this trade, I am currently out of this trade. At least I've been able to do about 50% move. I think I got into this trade from this zone, and I've been able to do at least 50% move of my overall bias. I am speculating that in the overall move Crash 1000 we want to make, it should be ending here before we see any further drop to the downside for a while before the continuous move to the upside or a continuous sell. But right now, I have done 50% of the move, of the total move, and I have secured my profit. I am out of the market. And also, guys, we talked about Boom 500 index. Can you see that my analysis is still on the screen? Yesterday, I speculated that I'll be looking at Crash 500 buying from this zone I marked out, to continue bullish to the upside, to this present zone. But as you can see, it got into my zone and bought for about, for about 60 pips to the upside, before reversing again. And then right now we are still seeing a bullish run at the moment. But I am actually out of the market. I placed my pending order at this zone yesterday, if you can recall. And if you want to see when I placed my pending order, you can check through the previous video I dropped. I placed my pending order at this, I think somewhere around here yesterday. And the market, let me clear this for you to see. Come on, guys. Let me quickly clear this for you to see. I placed my pending order and the market just came short of my entry and reversed to the upside. I think my pending order was somewhere around here, this line, this green line. And if you look closely, you see, let me zoom it in for you to see. If you look closely, you see that price did not touch my entry. Can you see? This particular sell didn't touch my entry. It just came short, some few pips to my entry, and then pushed bullish to the upside. And I already speculated that until price touches my entry, I won't be entering into the market. I won't be entering into the market. So as I was initially waiting for a short bullish move and then a retest of this zone before a continuous bullish move to the upside. Price started buying, market started buying, bought to this zone, and then I closed out of my buy limits. I closed my buy limits, and you can see price dropped from this zone, dropped to this downside. And right now, as you can see, it is trying to go bullish, although in a way, my bias is almost changing. My bias is almost changing that boom, 500 might begin to tank from this zone until I see a significant reason to enter the market again. I won't be entering the market, because if you look closely at this zone, let me zoom it in like this. This is actually a support region on the H1 time frame. This is a support region, and if you look closely, you get to see that price in a way has retested this zone multiple times, and there's every tendency that price breaks this zone to the downside and continues bearish. So that is why I didn't opt into this trade. I would want to see another clear confirmation to enter into the market again. Can you see, guys? Can you see the trend line? Let me clear this out for you to see. Can you see the trend line, guys? Can you see the trend line? This is the third touch on this trend line, and price also is rejecting from a zone here that is actually a point of interest to me. And as I said, this is a support region that is in a way turning to a resistance. This is a support region turning to resistance, because if you look closely at this zone, you get to see that price has broken this zone. Price broke this zone, and because of this double bottom here, it pushed to the upside to retest this trend line, and then we might be seeing a tank to the downside. We might be seeing boom 500 tank to the downside. So guys, as traders, you don't want to be perfect in the market. Perfection is not your call in the market. You want to analyze and adjust to the every move the market is making. So you can see yesterday I said I'll be looking at a bullish run, but the bullish run didn't play out perfectly well. Right now I am seeing another thing in the market, and definitely my bias is changing. So I'm not looking to be 100% right. I'm just looking to react to whatever the market does, and that is the call of every trader. You're not called to forcefully predict what the market will do. And as you are seeing that it is going against you, you are still hell-bent, holding your bias, saying it must buy. You're not called to forcefully push the market to the either upside or downside, depending on wherever you want. But you are called to react to whatever the market, whatever price is doing. Understand? You are called to react to whatever price is doing. And as you can see, this is actually a good zone for entry for me. Can you see? This is an initial support, turn resistance. Can you see? Initial support, turn resistance on a trend line in an order block. These confirmations alone is enough for me to short this market. It's enough for me to short this market. And if you look at this zone carefully, you get to discover that price is actually at a psychological level. This is around 3850, around 3850, 3860, and that is actually a psychological level in the market. This zone where price is right now is a psychological level in the market. So I'll be looking to go short on boom 500. I'm looking to go short on boom 500 and watch how the market plays out. So if you're entering this market from this zone I am analyzing from, then you will just be risking about, let me see, about 20 pips in the market, because we want to place your stop loss above this zone, about 20 pips in the market to catch the overall down sell or the overall down move of boom 500 index. Because right now, if you look into history, you get to discover that this is, I think this is the overall, this is the all-time low the market has done in a, yeah, I think this is the all-time low the market has done in a long while. And I think boom 500 will want to continue in its bearish direction. Boom 500 would want to continue in its bearish direction. So what if you are seeing this late, then you want to wait for price to break through this support region, and then do a retest. After the retest, you might want to enter for a short. So that's that about boom 500 index. Also boom 1000 index, I speculated that my overall bias still on boom 1000 index is a sell. And right now, you can see the price is reacting at this zone. I might be seeing a continuous short from this zone to the downside. So that's that about the 1000. My bias still remains bearish for the meantime. My overall bias still remains bearish for the meantime. So guys, let me quickly give you a piece of advice before I look into another commodity. Wow, this is a massive sell. How didn't I see this sell? Okay, guys, let me just quickly give you an advice, a quick advice that I believe will benefit you. Now, as a trader, I want you to understand that you don't necessarily need to trade every day or every time before you become a profitable trader. There's one thing that is common amongst newbie traders. You always want to pick trades. And that is something that you would want to avoid as a newbie trader. You don't want to trade every time. And when I mean trade every time, I mean entering into the market, like taking positions every time. You might want to analyze the market every single time, because as a newbie trader, you want to familiarize yourself with what the market is doing. But it's not compulsory you pick trades every time, that is, place positions every time. You might as well analyze the market and not pick trades. But newbie traders always want to enter the market, and they don't understand that. In fact, most traders don't understand that staying away from the market is a trading strategy. Stay away from the Forex market, from the synthetic indices market for a while, if you haven't seen your entry confirmations, is a trading strategy. So guys, you don't always want to enter into the market. You don't always want to place positions. You want to just look out for high probability setups and trade the high probability setups you see. You don't want to enter the market every single time. And also, you want to stick with a few commodities in the market. You see some people take trades on Crash 500 index. After making profit on Crash 500 index, they go and open a trade on, let me say, VIX 75 using the smallest lot size, and also either on VIX 51S. Where is that commodity now? VIX 51S, neglecting the fact many of them don't even know that VIX 75 and VIX 51S are the heaviest commodities on synthetic indices market. This is it. This commodity is very, very heavy. Even though you are using the smallest lot size on V51S and V75, they are heavier than Boom 500, than the smallest lot size on Boom 500, and also the smallest lot size on Crash 500. That is why you see them take trades on Crash 500. They make about $10 in a day, $20, and either $50, as the case may be. And then they go to another commodity like V51S or V75 and open trades, and then eventually lose everything they've gathered for the day. They lose everything they've gathered for the day, and they feel as though the Forex market is a scam, or the synthetic indices market is a scam. But you need to understand that you just have to stick with a pair at a time, or a commodity at a time, and understand how that commodity runs or how that commodity works. And once you are now well informed about the commodity, you might now want to change. You might now want to add either one or two to the commodity you are trading. So guys, you don't want to trade every time. You want to only look out for high probability setups, and trade one or two commodities at a time. I've said this times to that number. If you go to my previous video where I think the what's it called now? The caption I gave to that video was every trader needs to watch this. I can't really remember now. If you go to that video, that is one of the videos I dropped, I stated categorically that there are some commodities you want to trade as a newbie trader. You want to trade some commodities that are not so heavy, because many times once you place trades and you begin to see massive drawdowns, you might be discouraged. So you want to trade some commodities that are not so heavy with your small account, and I've mentioned them in that video. Let me just quickly do a recap so that you can actually get a hold of them again. You want to trade for your small account as small as $50. You want to trade even $10. You want to trade V75-1S. V75-1S is in fact, V75-1S is the lightest commodity on the synthetic indices market. This commodity, I've literally carried about 19 cents to around $4 using this commodity, and from $4 I was able to take it to around $29 in a single day using this commodity. And also, you want to trade Boom 500 index. Boom 500 is very, very, very light, very, very light. If you want to trade it, you should be slashing your lot size. And you also want to trade, I think, V50. V50 is also very, very light. V50 is also very, very light. And those are in a way, the lightest commodity for the meantime on the synthetic indices space. So guys, you don't want to trade everything. You don't want to trade all commodities. You don't want to trade everything. So guys, let me quickly go into a quick analysis. We'll just do 1 or 2 analysis and we'll be off for today. Okay, I actually gave this to my friends, to my trading mates not too long ago. I dropped it on our discussion group. I said I'll be looking out for a short buy on, on synthetic indices market. And as you can see right here, if you look closely on the 5-minute time frame, you get to see that I marked the support region. And price is buying from that zone. Quickly, let it just load so that you see price is buying from that zone. Let me go to the 1-minute time frame. Okay, can you see, guys? Can you see? I marked the zone now. This was where I entered from. I was able to make about, okay, I opened 2 positions, 0.2 in 2 places, and I closed one on around $6, and I broke even on one, and I am letting it run. Right now, it should be on, let me see, maybe around $4 thereabout because of this drawdown. Right now, this is actually in profit. But this is a scalp trade. I told them that it's just a short buy. So if it taps me out, it will be tapping me out in profit. So guys, boom. Okay, let's just say boom. I'm already acquainted with the crash and boom market. Step index, I might be seeing a buy on step index for the meantime, although it is not really clear to me yet. But at the moment, I am seeing a buy. It has not given me my full confirmation, but based on the few confirmations I'm seeing, I am seeing a short buy to the upside on step index. And also, let me look at crash. Is it crash 300 now? I think I gave this to my, no, I should check boom 300. Boom 300. I think I gave this signal to the free group some couple of weeks ago. Can you see that this move has been for almost, let me see, this is already one. Okay, I think this was where we entered from. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days. For the past 17 days, I gave the buyers. If you check my free group, you're going to see there. Just scroll up, check this free group and scroll up. You get to see where I gave the buyers for a buy. And I said I'll be looking at boom 300 buying into this zone. As you can see, it has smashed our take profit. One thing as a trader is that you want to be emotionless. You want to be emotionless because many times people don't have the mental strength, the mental fortitude to be able to hold trades for long. Although I understand that we have different types of traders. We have swing traders, we have day traders, we have scalpers, we have position traders. But I believe that for you to be able to maximize your time well in the synthetic indices market, you would want to be a swing trader. Personally, I'm a swing trader and it gives me freedom of time. It allows me to do other things. So even though you are a full-time trader, I believe that the best way of trading, I don't know, swing might work for some, swing might not work for some, day trading might work for some. day trading might not work for some. Scalping might work for some, while scalping might not work for some. But personally, I believe swing trading is the best kind of trading because it gives you the freedom of time to do other things with your family. You can go out with your family, you can go out to see your friends, you can have personal time to yourself. But if you are just seated on the screen, looking at the screen 247, then you might not have that freedom to yourself. The goal of most traders, in fact, not even most traders, of every trader is to quit their job, because that is actually what you hear every trader say, quit their job and have time for themselves, have full time for themselves. But then it would be nice for you to quit your job, you quit your 9-to-5 job and then come back to the Forex market and continue your 9-to-5 job. Because just sitting at your screen, sitting and looking at your screen from morning till evening, from morning till afternoon, day trading, scalping, is just as though you left 9-to-5 to continue 9-to-5 at all. Understand? So personally, I believe swing trading is one of the best kind of trading that anyone would want to employ. In fact, we have big billionaires in this trading sphere, in the likes of Warren Buffett and other traders who trade position kind of trading. They go trade for 1 year, 2 years, they swing trades or the position trades for 1 year, for 2 years, and it gives them the freedom of time to actually do other things in the market. It gives them the freedom of time to do other things with their life, run their businesses, and do amazingly well with their life. So guys, you want to adopt, personally, I would advise that you adopt the swing kind of trading so that it will afford you freedom to do other things. So what brought me to this point was that many people really have the mental strength to hold trades. That is why you see them scalp, they scalp $10 and lose $30. They scalp $5 and lose $50 in the market. You want to just analyze the market, place your entry, place your stop loss, and let the market run. Place your entry, place your stop loss, and let the market run. So long that your stop loss is within the range of your capital, is within the range in which you can lose, the dollar range or whatever it is that you are able to lose, then you are good to go. Just let the market play out. And if it taps you in loss, if you actually practice proper risk management, then you shouldn't be losing much. If you practice proper risk management, you shouldn't be losing much. But if you don't practice proper risk management, that is when you'll be scared to hold trades. That is when you'll be scared to hold trades. But if you practice proper risk management, let's say on a $10 account, you are risking just 1% of your account or 0.5% of your account on a particular trade. You won't be scared to hold the trade. Risking 0.5% to make 1%, 2%, 3%, 1:2, 1:3, as the case may be. And even in some cases, it can give you even more percent. If you are risking very, 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 very small of your account, very, very small percentage of your account to make a huge return or to get a huge return, you won't be scared to hold trades. You won't be scared to hold trades. But many people don't have the mental strength to hold trades because they are actually risking too much. They are risking too much. And then that is not where you want to be. You don't want to be a trader who places positions and then your mind is not at rest. And then your mind is not at rest. You want to place your positions and then be at peace with yourself, because you know that even whatever you are losing, if eventually or if peradventure you lose, it is nothing compared to the capital that is still remaining. Understand? So guys, I'll be ending this video here. I gave this signal yesterday on the free group. Those that were available to see it actually made profits. I think I wrote the market from this zone, and I got that from this exact zone. Is it this zone now or this zone? I think it was this zone I got that from. I got that from this zone. Just some couple of hours ago, I got that from this zone. And I was able to cap in a very, very huge amount of profit. So guys, the last advice I have for you guys is trade today in such a way that you'll be able to trade tomorrow. Trade today in such a way that you'll be able to trade tomorrow. Have I blown accounts? Yes, I've blown accounts. I have made losses. I have made losses. But overall, I am still consistent because I understand proper risk management, I understand risk management, and I understand how to place positions, how to use lot size well, so that I won't be scared to hold trades. So guys, trade in such a way that you'll be able to come back tomorrow. Don't lose your capital today, because if you lose your capital today, you won't come back to the market tomorrow. And mind you, the market is always here. The market is always here. But if you blow your capital today, if you lose capital today, then your capital will not be here tomorrow. So guys, trade in such a way that you would be able to come back to the market tomorrow. Even if you make losses, if you have losing streaks in a week, because it happens to all traders, not virtually all traders lose. All traders lose. So even if you have losing streaks in a week, you would want to still be able to come back to the market because you're able to manage your trades well, you're able to manage your capital well, you're able to apply proper risk management to your trade. If you know me well, you understand that I always emphasize proper risk management. I always emphasize proper risk management. So guys, that's that about this video. This video is very, very lengthy. It needed to be like this because I needed to just say some couple of things that will be of help to newbie traders, to intermediate traders, and even to professional traders. So guys, as I said, I'll be dropping the link to my Telegram group in the description below, so that if you want to join the community of traders, those who have like minds as you can click it and join us. And also, if you want to join my mentorship program is on, and you can hit me up on Telegram. And I will do well to respond. And it's actually a lifetime mentorship with a very, very, very small token. What you'll be receiving in my mentorship is nothing compared to the amount you'll be paying. It is nothing compared. The value you receive is far more than what you'll be paying. So guys, that's that about this video. Until I come your way again, this is Perfect Forex. Do have a great day. This is your favorite trader. This is your brother, Perfect Forex. Do have a great day and God bless you.